Whoa. I was looking at my portfolio this morning, and like some of my stocks are huge, like double digits. What is going on?
It's been a crazy 24 hours, that's for sure.
It's absolute market mayhem.
Yeah.
It's all because of Trump's surprise win.
Mm.
We're going to dive deep into how the stock market is reacting and what this might mean for your investments.
Yeah. It's certainly been a wild ride. I think the markets are still trying to figure out what this unexpected outcome means. And we're seeing some pretty big moves in different sectors.
Yeah, for sure. The Dow had its best day since 2022, and both the S&P 500 and the Nasdaq are hitting record highs. I mean, there's just a ton of green on my screen right now. Where do we even start with all of this?
Well, I think if we look a little closer, it's not like the entire market is reacting the same way, right? It's almost like investors are picking winners and losers based on which industries they think will benefit from a Trump presidency.
Okay, that makes sense.
Yeah.
So who are the winners in this scenario?
Oh, definitely financials are feeling pretty good right now. Banks especially are anticipating that there will be fewer regulations under Trump. They're hoping that he's going to roll back some of those Dodd-Frank regulations, which could mean bigger profits.
Yeah.
And we might even see a jump in mergers and acquisitions, which is another area where banks could see some gains.
And when you say gains, you mean some serious gains, like JP Morgan Chase is up more than 11%, and Goldman Sachs is up over 13%.
Yeah. That's a pretty clear signal that investors think a Trump presidency will be good for the financial sector. And it's not just banks. Industrials are doing well too, particularly companies that are tied to steel, autos, and even railroads.
Because they're expecting more protectionist trade policies.
Right. They're anticipating tariffs and policies that favor domestic manufacturing over foreign competition.
So if Trump actually follows through on those campaign promises, companies like U.S. Steel and Ford could see a real boost.
That seems to be the thinking right now.
Yeah.
And even the Russell 2000, which tracks smaller companies, jumped almost 6%.
Wow, 6%. That's a big jump. What do you think is driving that?
It could be a sign that investors think that smaller companies are more adaptable to policy changes. Or they might be seen as potential acquisition targets, as the landscape shifts. So there's a lot of speculation fueling this rally. We'll have to see how things actually unfold.
Okay, so we've got financials and industrials riding high on this Trump wave. But it can't all be good news, right? What about the bond market? Seems like it's kind of freaking out.
Yeah, the bond market is definitely sending us some mixed signals. The yield on the 10-year Treasury note spiked to a 4-month high, and that's making some people nervous. When those yields go up, it usually means higher borrowing costs for everyone.
For businesses and consumers.
Yeah, exactly.
So what's spooking the bond market? Is it all about Trump?
Well, I think the market is trying to figure out what Trump's policies will mean for inflation. His proposed tax cuts and tariffs could boost the economy in the short term, but they could also lead to higher prices down the road. And that's what's making bond investors a little uneasy.
Right, because inflation eats away at the value of their investment.
Yeah, exactly. So they're demanding higher yields to make up for that risk.
And all of this is happening as the Federal Reserve is meeting right now. Talk about pressure. They were expected to announce another rate cut. Do you think this whole market earthquake is going to change their plans?
The Fed is in a really tough spot right now. They're trying to support economic growth while also keeping inflation under control. A rate cut could stimulate the economy, but it could also push inflation higher. Now with the market reacting so strongly to Trump's win, it's really anyone's guess what they'll do.
Yeah, it's a lot of uncertainty to navigate. Speaking of uncertainty, let's look at some individual companies, those stock spotlights we talked about.
Okay, let's dive in.
All right, first up, Tesla. It surged almost 15%. I know Elon Musk and Trump haven't always been on the same page. So what's driving this surge?
Yeah, it's a bit of a head-scratcher. But some people are speculating that a Trump presidency could actually be good for Tesla. For example, Trump has talked about investing in big infrastructure projects, and that could mean more demand for Tesla's energy storage solutions. There's also been some talk about potential tax breaks for electric vehicles, which would definitely be a win for Tesla. And it's not just Tesla. We're seeing big gains for more traditional energy giants, too, like Chevron and ExxonMobil.
They must be happy about the election results.
Yeah. They're up on hopes that Trump will roll back some of the environmental regulations and support more oil and gas production.
So it sounds like the energy sector's having a good day, no matter what your take is on renewable energy.
Yeah, that seems to be the case. Investors are looking at the potential policy changes. And right now, both traditional and renewable energy companies are seeing some benefits.
It's fascinating how the market reacts to these potential winners and losers, based on what they think might happen with policy changes. Speaking of companies that could benefit from less regulation,
Yeah.
let's go back to those big banks we talked about. Are they just riding this deregulation wave? Or are there other factors at play?
Yeah, deregulation is definitely a big part of it.
Yeah.
But there's more to the story. Remember those mergers and acquisitions?
The M&A.
Right? Well, banks often play a key role in financing those deals.
Oh,
So if we see a surge in M&A activity under Trump, banks are likely to get a cut of those fees.
so they're kind of like the middlemen.
Exactly. They're the deal makers. They profit no matter who's buying or selling.
Makes sense.
Yeah.
It's like a whole ecosystem built around deal making.
Okay.
Let's shift gears for a moment and talk about the US dollar. It had its biggest one-day jump since 2016. That's got to have some implications for investors, right?
Absolutely. The surge in the dollar is mainly due to the potential for higher interest rates in the U.S., which attracts foreign investment because investors are always looking for higher returns. But a strong dollar can actually be a double-edged sword.
Oh, really? So it's not all good news.
Right. While a strong dollar sounds good, it can actually hurt U.S. companies that export goods.
Because it makes their products more expensive for overseas buyers.
Exactly. If a company is selling its products in Europe, for example, and the dollar is strong against the euro, those products suddenly become a lot more expensive for European consumers, which can lead to lower demand and hurt those companies' profits.
That's a really important point. And I think this is where it gets really relevant for our listeners who are managing their own investments.
Absolutely. You really have to look at the companies you're invested in and consider how they might be affected by a strong dollar. If a company relies heavily on exports, a strong dollar could really hurt its earnings.
So it's all about understanding those global implications. It's not just about what's happening here in the U.S.
Right. The world is so interconnected these days. What happens in the U.S. can have a big impact on global markets. For example, we've seen the Mexican peso and the British pound weaken against the U.S. dollar since the election.
So Trump's victory is having a ripple effect beyond our borders. It's a global event that investors need to be paying attention to. But let's bring it back to the U.S. for a minute. What are some of the other policy changes that investors are looking at with the Trump presidency?
Well, tax reform was a big part of his campaign. He talked about lowering the corporate tax rate, which could boost corporate profits and maybe lead to more investment and job creation.
That sounds like it could be good for the overall economy. What about individual taxpayers like you and me? Will we see any tax relief?
That's still a big question mark. Tax policy is really complicated, and any changes are going to be carefully considered and debated. We'll just have to wait and see what the final plan looks like and how it might impact individual taxpayers.
So lots of uncertainty there. What about deregulation? That was another big campaign promise from Trump.
Yes. He argued that there are too many regulations holding back economic growth and promised to roll back some of them. We've already seen how the financial sector is reacting to that possibility.
Right. Those bank stocks are going through the roof. But what about the potential downsides of deregulation?
That's a really good point. While some regulations are probably unnecessary and burdensome, others are there to protect consumers and make sure the market is fair. Finding that right balance is going to be crucial.
It seems like there's a lot at stake here. The markets are reacting to both the potential benefits and risks of a Trump presidency. But like you said earlier, we're still in the early stages and there's still a lot of uncertainty.
Exactly. We're in uncharted waters here. It's hard to predict how things will play out long term. What we do know is that markets don't like uncertainty. And we're probably going to see a lot more volatility as investors try to make sense of this new landscape.
So what's an investor to do in these uncertain times? Should they be making any big changes to their portfolios? I mean, it feels like we're in the middle of a financial earthquake. Should we be running for cover? Or is this a chance to buy the dip?
Well, I don't think it's time to panic.
Okay.
Making big decisions based on how the market is moving right now is probably not a good idea. This is a good time to take a look at your portfolio and just make sure it still aligns with your long-term goals.
So you're saying don't try to time the market or chase those hot stocks.
Exactly. Stick to your investment strategy and try not to let your emotions get the best of you. And diversification is always important.
Right. Don't put all your eggs in one basket. Spread the risk. But honestly, it's a lot to take in. And there's one thing that our listeners should be watching really closely in the coming weeks and months. What's the big wild card here?
If we're thinking about the big picture, I'd say inflation. How Trump's policies end up impacting inflation is going to be really important to watch. Will his tax cuts and tariffs lead to a sudden spike in prices? Or will the Fed be able to keep things under control?
So inflation is the thing to watch.
Yeah, it's a complex issue. There are a lot of factors that influence it, both here in the U.S. and globally. But understanding how inflation is trending is really crucial for making good investment decisions. If inflation gets out of hand, the Fed might have to raise interest rates more aggressively, which could hurt economic growth and send stock prices tumbling.
So keep an eye on those inflation numbers.
Hmm.
Got it. Well, I think we've given our listeners a lot to digest today. It's been a roller coaster of a week, and it sounds like the ride isn't over yet.
Yeah, the market is still trying to adjust to this new reality, and I think there's going to be more volatility ahead.
Mm-mm.
But remember, market fluctuations are normal. Don't let the headlines make you do something you'll regret later.
That's great advice. Stay calm, stay informed, and stay focused on your long-term goals. And of course, stay tuned as we continue to dive deep into the world of finance. It's always changing.
Always. Until next time.